financial ratio is a relative magnitude of two selected numerical values taken from an enterprise's financial statements. Often used in accounting, there are many standard ratios used to try to evaluate the overall financial condition of a corporation or other organization. Financial ratios may be used by managers within a firm, by current and potential shareholders of a firm, and by a firm's creditors. Financial analysts use financial ratios to compare the strengths and weaknesses in various companies. If shares in a company are traded in a financial market, the market price of the shares is used in certain financial ratios. Ratios can be expressed as a decimal value, such as 0.10, or given as an equivalent percent value, such as 10%. Some ratios are usually quoted as percentages, especially ratios that are usually or always less than 1, such as earnings yield, while others are usually quoted as decimal numbers, especially ratios that are usually more than 1, such as P/E ratio. These latter are also called multiples. Given any ratio, one can take its reciprocal. If the ratio was above 1, the reciprocal will be below 1, and conversely. The reciprocal expresses the same information, but may be more understandable. For instance, the earnings yield can be compared with bond yields, while the P/E ratio cannot be. For example, a P/E ratio of 20 corresponds to an earnings yield of 5%. Sources of data for financial ratios. Values used in calculating financial ratios are taken from the balance sheet, income statement, statement of cash flows, or the statement of retained earnings. These comprise the firm's accounting statements, or financial statements. The statement's data is based on the accounting method and accounting standards used by the organization. Purpose and types of ratios. Financial ratios quantify many aspects of a business and are an integral part of the financial statement analysis. Financial ratios are categorized according to the financial aspect of the business which the ratio measures. Liquidity ratios measure the availability of cash to pay debt. Activity ratios measure how quickly a firm converts non-cash assets to cash assets. Debt ratios measure the firm's ability to repay long-term debt. Profitability ratios measure the firm's use of its assets and control of its expenses to generate an acceptable rate of return. Market ratios measure investor response to owning a company's stock and also the cost of issuing stock. These are concerned with the return on investment for shareholders, and with the relationship between return and the value of an investment in company unregistered trademark S shares. Financial ratios allow for comparisons, between companies, between industries, between different time periods for one company, between a single company and its industry average. Ratios generally are not useful unless they are benchmarked against something else, like past performance or another company. Thus, the ratios of firms in different industries, which face different risks, capital requirements, and competition are usually hard to compare. Accounting methods and principles. Financial ratios may not be directly comparable between companies that use different accounting methods or follow various standard accounting practices. Most public companies are required by law to use generally accepted accounting principles for their home countries, but private companies, partnerships and sole proprietorships may not use accrual basis accounting. Large multinational corporations may use international financial reporting standards to produce their financial statements, or they may use the generally accepted accounting principles of their home country. There is no international standard for calculating the summary data presented in all financial statements, and the terminology is not always consistent between companies, industries, countries and time periods. Abbreviations and terminology. Various abbreviations may be used in financial statements, especially financial statements summarized on the Internet. Sales reported by a firm are usually net sales, which deduct returns, allowances, and early payment discounts from the charge on an invoice. Net income is always the amount after taxes, depreciation, amortization, and interest, unless otherwise stated. Otherwise, the amount would be EBIT, or EBITDA. Companies that are primarily involved in providing services with labor do not generally report sales based on hours. These companies tend to report revenue based on the monetary value of income that the services provide. Note that shareholders' equity and owners' equity are not the same thing. Shareholders' equity represents the total number of shares in the company multiplied by each share's book value. Owner's equity represents the total number of shares that an individual shareholder owns, multiplied by each share's book value. It is important to make this distinction when calculating ratios. Other abbreviations, note, these are not ratios, but values in currency. COGS equals cost of goods sold, or cost of sales. EBIT equals earnings before interest and taxes, EBITDA equals earnings before interest, taxes, depreciation, and amortization, EPS equals earnings per share. Ratios, profitability ratios. Profitability ratios measure the company's use of its assets and control of its expenses to generate an acceptable rate of return. Gross margin, gross profit margin or gross profit rate. ANORA. Operating margin, operating income margin, operating profit margin or return on sales. Note, operating income is the difference between operating revenues and operating expenses, but it is also sometimes used as a synonym for EBIT and operating profit. This is true if the firm has no non-operating income. Profit margin, net margin or net profit margin. Return on equity. Return on assets. Return on assets. Return on assets DuPont. Return on equity DuPont. Return on net assets. Return on capital. Risk-adjusted return on capital. ANORA. Return on capital employed. Note, this is somewhat similar to, which calculates net income per owner's equity. Cash flow return on investment. Efficiency ratio. Net gearing. Basic earnings power ratio. Liquidity ratios. Liquidity ratios measure the availability of cash to pay debt. Current ratio. Acid test ratio. Cash ratio. Operation cash flow ratio. Activity ratios. Activity ratios measure the effectiveness of the firm's use of resources. Average collection period. Degree of operating leverage. DSO ratio. Average payment period. Asset turnover. Stock turnover ratio. Receivables turnover ratio. Inventory conversion ratio. Inventory conversion period. Receivables conversion period. Payables conversion period. Cash conversion cycle. Debt ratios. Debt ratios quantify the firm's ability to repay long-term debt. Debt ratios measure financial leverage. Debt ratio. Debt to equity ratio. Long-term debt to equity. Times interest earned ratio. OR. Debt service coverage ratio. Market ratios. Market ratios measure investor response to owning a company's stock and also the cost of issuing stock. These are concerned with the return on investment for shareholders, and with the relationship between return and the value of an investment in company unregistered trademark S shares. Earnings per share. Payout ratio. OR. Dividend cover. PE ratio. Dividend yield. Cash flow ratio or price cash flow ratio. Price to book value ratio. Price sales ratio. PEG ratio. Other market ratios. EV/EBITDA. EV sales. Cost income ratio. Sector-specific ratios. EV capacity. EV output. Capital budgeting ratios. In addition to assisting management and owners in diagnosing the financial health of their company, ratios can also help managers make decisions about investments or projects that the company is considering to take, such as acquisitions or expansion. Many formal methods are used in capital budgeting, including the techniques such as net present value, profitability index, internal rate of return, modified internal rate of return, equivalent annuity. See also, Outline of finance valuation, list of financial performance measures, Greeks, references. External links, stock valuation metrics.